Well, the Nifty has broken yesterday's low. It's now below 10,850 and the Bank Nifty also down about 200 points. Even the advanced decline has now once again moved in favor of declines. This is a bit of a mini breakdown that you're seeing in the market right now. Good time to get you the BTST calls. Ashwani Gujral and Mitesh Thakkar with us for that. Ashwani, you go first. Thoughts on the market and, of course, your stock calls?
This is not a minor breakdown. This is a major breakdown. And people should get out of their longs, hopefully take some short positions, because the kind of narrow market we had, this is going to go a while. And the reason seems to be that global markets are topping out, and hence, at least, for starters, 10,750 should happen. So let's be clear, finally the breakdown has happened, the follow through is coming, and people should now carry positions home. Individual stocks, BOB is a sell with a stop of 113, target of 105. HDFC Bank is a sell with a stop of 2130, target of 2190. And Avenue Supermart is a buy with a stop of 1380, target of 1430.
By the way, this is once again an India underperformance day, because European markets have not fallen as much. No markets down a percent, almost a percent, which is the story with us. And of course, Asia, or all of the Asian markets ended up much better than where we are, flat to slightly positive. Anyway, that's the global screen for you. Let's get some more trades in. Mitesh, what would you be doing now that the sell-off is accentuating?
I have two sell calls. In fact, one of them is Grasim, which can be sold with a stop at 800 for target of 755. And the Bank Nifty also sell, I think, is very close to the target of 27,200. So for the time being, I'll avoid it. But anything close to about 27,350, 360 would be a selling zone, and keep a stop of about 80 points, look for 27,200. If that breaks, I think 26,920, 950 can also happen.
Okay. All right, Mitesh. Thanks for those calls. Now, Anuj, for now, we seem to be testing and kind of breaking below this 10,850 zone. And today, the big guns are not coming out batting. RIL, HDFC Bank, Infosys. As of now, they're all sitting on the sidelines. How do you read the screen?
The beauty of human mind is it wants to see what it wants to see. Right? You can extrapolate all the things. The fact is that till about 2 or 3 hours back, we were discussing the probability of the market breaking out, right?
Upside breakout.
Upside breakout. Yeah. And now all of a sudden we're discussing the probability of a breakdown. The fact is that the market has done nothing. This is a market which is in a range. This is a market in which you have to respect the risk reward. The market in which at around 10,950 you have to book profit. This is a market in which at 10,750 you have to buy. Triggers will come later, whether it's crude, whether it's global markets, whether it's earnings. Today, everything is looking bad because 2 or 3 earnings have been bad. ITC in particular, that's broken the back of the market. I think if you see the contribution plate on the Nifty, you will find out the kind of contribution that that one stock is making to the index. So, 26 points because of that. And it has been a narrow market. Today, over the last 2 days, both Infosys and Reliance have sort of cooled off a bit. Those were 2 stocks which are supporting the market till now. Now, who's to say tomorrow morning, they once again start to rally and once again things reverse. So, this is not a market in which you want to take aggressive call after, an event has happened. You want to take positioning on the other side at the extreme. 10,950 you want to sell, 10,750 you want to buy. In between, I think if you keep changing your positioning, I think you'll find that you're struggling in this market. That's been the market's message, and I would respect market's message. Sure. Madhun, your thoughts?
100% agree with you. I think if you allow me to say, the index itself has been a misnomer. I think not many are discussing that the advanced decline ratio has been absolutely in favor of declines over the last 2 days, despite the index going up. And today, if you look at the top 5 stocks, I think sitting in your studio, I can tell you that it's HDFC Bank, which could have reacted, Infosys could have reacted, and of course, ITC has come down sharply. So if you take these 4 stocks away, for all you know, I think the markets are not bad relatively as compared to what they were the last 2 days. The last 2 days, the index was up because largely skewed because of 4 or 5 stocks, and those 4 or 5 stocks have reacted along with ITC. Yes. So that is what is making the index look down. But the market, I think, would be as discomforting as what it was over the last 2 days. So nothing much has changed. I agree fully with you on this, Anuj.
Dhananjay, 2 sharp earnings reactions, if you could give us your views on them. One, the way ITC is being punished. And second, this absolute disenchantment with ICICI Pru. Yes, there have been a couple of misses on persistency ratio on the margin, but 12% decline.
Yeah, I think, see, the thing is that overall the market has been, the backdrop is actually uncertain, and I think that the market will remain uncertain going forward because we think that some of the expectation that the market had actually priced in with respect to global cues, I think from Fed rate standpoint is actually waning off. So I think we believe that rupee will actually depreciate. So we are looking at rupee depreciating to almost like 75 in the near term. I think that is something that will sort of play out in the market going forward. So overall, I would say that in the spaces that we like would be the IT space in particular. So with respect to ITC, I think there has been a sort of a disappointment in the overall performance. I think it versus the expectation, the performance has been muted, and on a standalone basis as well. So I think that's the way the stock has been reacted to. The reaction has been that way. I haven't looked at the Pru Life thing, but I'll reserve my comment on that. But generally, I would expect the markets to remain sort of volatile, notwithstanding whatever numbers have come out till now.
Okay, Kotak is actually seeing some profit taking after that relentless move that we have seen on the stock from 1200 all the way up to 1300. That's cooled off a bit. Your thoughts on this one, Mehrbun, before we thank you?
I think Kotak, in terms of numbers, very impressed, I think. But the overhang is basically the RBI issue. Taking the RBI to court and then trying to work out an out-of-court settlement sounds funny, to say the least. But if there is a solution coming ultimately, which the shareholders don't mind it, the minority shareholders don't mind it, I don't see any reason why Kotak should not be looked at positively right now. But till the time that overhang is there, honestly, not too comfortable buying at the present level. But in terms of numbers, I think it was one of the results which exceeded the expectations.
Okay, speaking of banks, Mehrbun, before we let you go, one private bank is your pick, IDFC First, the sort of new avatar of IDFC Bank. The only thing is the stock has run up a lot.
Yeah.
From the low, some 35-40%, it's already rallied in anticipation of this merger going through. Is it still a good buy now?
Yes, it's a stock which has given about 30% return to our investors over the last 1.5 months. And I had mentioned it on the television channel also a month and a half ago. But even at 48 or 47, which is the present level, I see the stock going up at least 75 to 100% over the next 2 years. The reason is very simple. The direction are something I've always believed in. And as far as IDFC Bank goes, IDFC First Bank goes right now, I think the direction is going to be positive. So if you look at a completely scrubbed, clean bank, investors are getting it just 0.6 times book value. I personally believe that the ROA and the profitability should only increase from here under Mr. Vaidyanathan. Point number one, retail is going to be 30% of the bank's books. Number two, and at the end of it all, such type of a bank at least deserves one-time price to book value. So at 0.6 times, you can easily calculate it should be at least 60, 70, 80% higher over the next 1-2 years. So I think at 47 also, despite the fact that you rightly pointed out, has gone up a little bit too sharply in the last 1.5 months. So 38 has become a 48, but I personally see a 48 becoming at least a 75 to 100 over the next 2 years. So very, very positive on it. And this is one of the stocks, or one of the few stocks in this market, which gives a lot of comfort to an investor because he believes that the downside is limited and there's ultimately an upside going to come. So I think, yes, IDFC Bank with clear-cut disclosure, holding it for our investors, advising them to buy still, and quite positive on it.
Okay, all right, Mehrbun, thanks very much for being with us on the show and giving us your take on all the stocks that we have discussed today. Dhananjay, finally, I mean, on the banks, now I'm talking about the earnings that we're still anticipating. Obviously, there'll be the PSU names, but specifically, let's say SBI or ICICI Bank, because the expectations are running very high from corporate lenders. The stocks have also run up quite a bit, specifically ICICI Bank. How would you look at these names now?
So I think as far as ICICI Bank is concerned, it has been our conviction idea. I think as far as numbers are concerned, I think they have been reporting good set of numbers in the last quarters, and I think the momentum is going to play out even going forward. There is a good proportion going into retail lending, and I think the ALM position of the bank is also fairly comfortable. So I think they and also they have good capitalization. So I think their prospects even going forward is going to be pretty good. So I think the stock has run up is broadly in line with our expectation. I think going forward also it should actually perform. So we think there is upside to the stock even going forward. So I'm not too worried about the run-up that has happened. I think with the potential growth that it has, it is still trading reasonably well. As far as SBI is concerned, I think there is a recovery as far as the credit growth is concerned. So that should actually reflect on the performance of the banks as well. Incrementally, we are seeing that there are resolutions that are happening to sticky asset that should be part of the commentary, and incremental GNPA creation is also going to be lesser. So I think those are some of the positive for SBI. I think what is concerning for me would be this whole farm loan waiver that is there and how it impacts SBI, because SBI is a very large contributor to the lending done by the public sector banks. And if I have to really extrapolate from what HDFC Bank has been telling in the result, I think there is a concern for SBI on this front that can actually that should be actually seen. So I think relative to ICICI Bank, I would relative to SBI, we would still prefer ICICI Bank from a longer term standpoint.
Okay, all right, Dhananjay, thank you very much for joining us on the show and sharing your viewpoint on all those different sectors and stocks. The market, a full perfect 100 down on the Nifty, and the big boys are really counting on the way down today. Check out Reliance's intraday graph. It's really exerting the pressure now. Obviously, the HDFC twins have also been on the way down, ITC itself. So today, Anuj, is a day when these stocks are not just sitting out. I mean, yesterday there was lack of participation from them. Today, they're standing up and getting counted, but on the way down.
Yeah, what is interesting is, you remember we went through a period, I think, before yesterday's decline, when the Nifty, index just kept going up while there was absolutely no participation from the mid caps. And I think I had blogged about it, that perhaps that's setting us up for some kind of vulnerability for the market. What we are now seeing is the absolute reverse of that, Surabhi. Now, for the last 2 days, the mid caps are actually not underperforming. The mid cap index even now is down 0.1%.
Yeah.
I mean, if this was a market breakdown, I think this should have taken the mid caps down like a third.
Yeah.
That hasn't happened, right? I mean, if it was a complete breakdown, the advanced decline by now should have been 1:4.
Yeah.
That hasn't happened either. It is a market where at index level, perhaps index management is a very strong phrase, but the way, it's just 3 or 4 stocks, it was working on the way up, it looked beautiful. It's today worked on the way down. That is it. I think it's just a combination of 4 or 5 big stocks, which really is playing on the other side today.
I couldn't take your point more, Anuj. Pull out KPIT Tech's intraday graph, pull out Granules intraday graph. Now, take your point, Anuj, that if this was a market collapse that was in the making, why would you have these kind of moves on these mid-cap stocks? Typically, these are also trader favorite, also institutional favorite, and yet there are buyers for them, in today's trading action.
Exactly. I think over the last 3 or 4 days, you've seen genuine buying return to mid-caps. I think I dare say that, in fact, the phase in which the market was going up, perhaps portfolios were not making money today. In fact, some portfolios would have made money. So essentially, we are still in a range right now. I think the range is 10,750, the larger range 10,750, 800 to about 11,000. That has not been violated yet. And till the time that is violated, I think I won't say that this is a market breakdown, because for tomorrow, all it would require is a 60-70 point rally. And once again, we would be talking about 11,000.